Hello again, Solis Wealth family. Greg Solis here with the update. First on the family front. I don't know about you, but we sure had a great Easter. I had everybody in town, which was awesome. Jack was there with Sydney, and Nicole was in town, and Emily, and had some nice dinners together. We had a beautiful sunrise service at our club, which was amazing. And so we had some great family time. I hope you and your family had a nice holiday as well. Well, market-wise, it continues to be a bumpy ride to say the least. This has been very challenging. A lot going on out there with this whole tariff war and trade war and all these things going on. And the big thing is that it's just hard to get a grip on what is coming up. For example, the S&P 500 right now, we got a lot of companies that are releasing earnings. And frankly, all of them are good first quarter. But some of these companies are literally not offering any guidance at all for next quarter because they just don't know. No one knows what these tariffs are going to end up. So this uncertainty continues to create a lot of challenges. Therefore, we see the NASDAQ down as I record this about 22%. The S&P 500 still down about 16-17%. The bond market's hanging in there, but we did see the 10-year Treasury. It's trading right around 4.39% or where yields are right now. So we got a little pullback on bonds, but overall they've been holding up relatively well. But it's been challenging. Gold prices are up. That was good. And there are some things that are doing okay. Some of our other investments are hanging in there. Some things are doing okay. So we're getting some counter correlation still, but it's been pretty challenging because the equity markets are just getting hit pretty hard. So it's going to continue to be a bumpy ride, but here's the thing. Short term, there's horrible headlines. I mean, things are just every day, these headlines are coming out and it's very, very difficult. But if we stay focused on the long term, I believe very strongly over the next 3 to 5 years, these markets will be a lot higher than where they are today. And so we see a lot of productivity gains coming out. We see some deregulation taking place. We do see taxes being reduced and earnings in the economy are still hanging in there. Again, the question is, do we slip into a recession? And if so, even then, we usually always come out of recession. So even though it's a challenging time, if we stay focused on the longer term, we're very optimistic where the markets will be 3, 5, 10, 15 years from now. But on the short term, 1 month, 3 months, 6 months, even a year from now, we don't know how volatile this thing's going to be. And so I don't know if we're out of the woods just yet, but we've had a big sell-off. And I always liked what Warren Buffett said, be greedy when people are fearful and be fearful when people are greedy. Right now, there is a lot of fear out there. So it might be a good buying opportunity for us long-term investors over the long haul. We feel very optimistic that things will work out. So hang in there. But in the meantime, if you have questions or concerns, you know we're here for you. Never hesitate to call. My very best to you. Take care.